you had the ability to call the bank and get the secret passwords and wire the money.
Right.
Like, how do
we keep checks and balances?
I guess, yeah, how would...
Yes, that's a very good question.
Other than them trusting you.
Sure.
How would they know that you're not...
Sure. Well, it's a very good question, right? So I can be the money man, right? And also be able to put my hand in the purse, right? Because then that, as you were saying, has conflicts of interest, right? So you have, we have established accounting policies across the board, across all of our companies, that help us, deal with these issues. So rule number one, I do not sign on any checking account. Okay?
I agree.
So I do, I'm not a signatory on any bank. Okay? Rule number two, any wire transfer that I process has a dual custody approval process. What does that mean? I set it up, somebody else knocks it down. Okay? These are things that are important for you guys to keep in mind in the future if you guys ever have to review or see what these policies are. I have a 2-signature requirement on every check. Okay? So that can be cumbersome, especially if you have a building or an office building that has a lot of expenses, because it means there's a lot of checks to sign. The check signers don't like to be bothered for checks every day.
I know.
Okay?
One day in a week, one day in a week.
One day a week, one specific time. You don't want to, otherwise you'll be sitting there every day signing checks. So you have to have clear guidelines as to when you're going to do your check runs. When is your accounts payable person going to cut off and say, okay, this is it. This is all I'm paying. Who makes the determination of what's going to get paid that week? Okay?
Approve.
Who has reviewed that there's enough cash in those accounts to make sure you're going to cover the check run that you're doing? Right? There's a lot of considerations to take into account. Last year, I did an analysis. I did an analysis of the total amount of checks that we cut in 2014, and I was, getting a lot of grief from our account signers that they were spending a lot of time signing checks. And regardless of the amount, our checks require 2 signatures. And by the way, when you open your bank accounts with whatever financial institution, you can ask them to set it up that way. Okay? It's not required, but it's an option that you have to set up as a control. But basically, the analysis was something like, we cut 5,000 checks in 2014. Okay? And out of those 5,000 checks that required 2 signatures, 75% of them were $1,000 or less. And out of those 4,500 checks that we cut last year, 85% of them were, or 90% of them were $500 or less. Okay, so when I gave this information to upper management, right, to the signers, I said, well, I understand you guys, have complained and about check signing, and here's some statistics, okay? And based on that, here's my recommendation, okay? My recommendation is either set a $500 or $1,000 threshold across the board, right? Where if the check is below that amount, one of the signatures will be pre-printed on the check. Okay? This will not, we will still require a live second signature on each one of the disbursements, but it would alleviate the need of having the 2 individuals signing these checks. So we did, they approved that recommendation. We implemented that, and we made it this, the signer that's less around, basically, so that the other people who have more time and are more around are always going to be the ones that can sign it.
The thing is, look, internal controls, and we talked briefly about them, and we can talk about them in the last class a little bit more. Ultimately, it's about safeguarding corporate assets, cash being the most fleeting of those corporate assets, right? And the one you want to protect the most. Ali's involved in a family business at the end of the day. which is very closely held and very closely managed. The control structure you create in that environment is going to be radically different than Exxon. Imagine in Exxon, nobody signs checks, right?
Yeah.
Everything's electronic. So you create different, different control structures. I could argue sitting here that, the whole signature process could even be bypassed and you could have other controls in place. But the way that business is structured, it may not work, okay? I mean, I worked in a business where we had 2 stacks of checks like this every week. And I had the authority to sign them individually. I sat down with the owner and made him sign them. Not from a security perspective, I wanted him to understand what was happening in the business. He never looked at financials,
Right.
it was all about just spending money, thankfully we're doing well. But I wanted him to see, and I wanted him to understand, it was the
What's
one
going on.
time a week where I could sit with him for an hour and he could see what was going on, right? That's not gonna happen where he's at, Mr. Cadino's not gonna sit down and do that, kind of work. So you've gotta work around the personnel that you have and the objectives that you're trying to accomplish.
Right, I mean, you can increase your internal controls, but increasing your internal controls comes at a price
Right.
because you need to have
Yeah.
the manpower to do it,
And
right?
the time.
I mean, the banks offer something called positive pay. I don't know if you guys know what that is. But positive pay is, let's go back to this, same scenario. I have 2 signers. If I use positive pay, I would assign a person who's not involved in the disbursement process, in either entering the payable or cutting the check. I would assign that person the responsibility of every day logging into the bank and verifying that the checks that cleared are checks that are on our register, right? And what would that do? That would limit, any check fraud, of anybody
Yeah.
cloning a check, which we had an experience last week with somebody who cloned a check. And was actually arrested on site, because of, this particular bank did a very well job in noticing and notifying us and notifying the authorities. But there's ways, but you're limited to the resources you have. Like, you do as best as you can with the resources you have. Nonetheless, I think that not being a signer and not, and having a dual control system on any disbursement is a good control, and one that passes all of our audit tests across the board and across different audit firms each year.
To the extent that you can segregate duties anywhere in the process, that's the best way. Although I said it last week, when you have collusion, what's collusion? When more than one person is in cahoots,
Right.
you can bypass any internal control. So ultimately, then the personnel process and the screening process, and we'll talk about credit later on, knowing who you're doing business with and who you're hiring then becomes very important, so.
But as a like a beginning developer where you're doing everything on your own, you're doing the accounting, you're doing the, you don't have the resources to build an army yet.
Right.
That you think that the best and most simplest way is just having different segregated bank accounts, different entities, so you can.
Well, that you
Best
need.
that you can, that you just have
But,
a statement.
Dustin,
that says-
that you need to do. Ultimately, legally, and if you want to go back, your ultimate concern for tax purposes,
Yeah.
each tax declaration that you have needs
Right.
to reflect, right, how you're dealing with the receipts and disbursements of that particular entity. And from a pragmatic perspective, the reason accounting exists is to help you do that. So, and what's the easiest way to do that? At the source. What's the source? What's the flow? What goes in and what comes out? What's that? So that bank account, right, which becomes a source of all income and expenses ultimately, needs to ultimately reside with a particular entity.
Yeah, but that, with the money going directly to the entities and getting dispersed and not going through the channels, that happens all the time.
I understand that. That's what we were
That's probably
saying.
my biggest issue that I have is.
Sure, and it
is all,
requires,
with the closing coming up,
right.
and then, you don't have the clear to close, you don't want to move the money over, and then they call you and say it's gonna happen tomorrow. And you're
Well,
like,
but you have to be ready, and you have had, that's where it takes a little bit of work
Yeah.
up front.
Yeah.
To, in anticipation of the close, have the entity set up and have the bank account set up for the entity, so when you're ready to execute, you know exactly where to wire. So yeah, it takes, you know, some organization on the front end, but I think in the long run, it really pays off because it keeps your records all clear.
We need to start wrapping up because we got to take a break. Any more questions for Ali?
It's very clear.
I think we can leave off the other thing.
Yeah, I think, yeah, we'll do that. I'll cover that in the diligence class for the ones who haven't done it. So Ali was going to go over some closing issues, but for those of you who did the diligence class already, we've done a commercial closing case, and the ones who haven't done it, you'll do it when we come up. So we can cover that. I'll cover that in another. But I think this has been very helpful. At least, you know, again, I say familiarity. The more that you see what other people are doing and what they're up against and what you need. So you look at, bless you, a guy, you know, so you got one guy with a family office and he has an accounting department with 7 people. And they work pretty hard.
Yeah.
And they work pretty long hours. So, you know, possibly if it were a traditional 9 to 5 job, there'd be a few more people working there as well.
For sure.
So,
I have one more question.
yep.
So, what's the reason that you guys don't do the tax returns? You just,
Listen,
It's another
being
set of eyes
being
to
an
it.
accountant, being an accountant can mean a lot of different things, right? You can be an accountant and focus on real estate, I know it well. You can focus on accountant and do forensic accounting, I know that very well. Taxes is an animal of its own.
okay.
Yeah.
You know,
Gotcha.
you definitely want somebody or a team in a firm who can offer you the expertise of knowledge in different areas, and that can specialize just in that. Tax advice, though some people, you know, think it's expensive, can have a lot of value. Because at the end of the day, you know, your expectations of profitability and returns on a job can be very negatively adverse if a tax return is done improperly and you wind up having to be audited and paying a lot of money if the things were not done properly. So.
And Dustin, even if you get big enough, you can ultimately create, most large companies have their own in-house tax departments, okay? But then you even get into what's structuring and what's compliance. And in a situation like the family office where Ali works, you've got an attorney who has an LLM, who's very focused on taxation, is very good at structuring, but he doesn't have time to do the compliance. And what I mean by compliance is you know, getting the tax returns done for 130 entities, which throw off K1s that in some of the entities become the flow of information, and some that ultimately go to the investors in all these different entities.
Federal returns, state returns.
Yeah.
If you have investors who live in certain states, you have to prepare a tax return for that state.
Yeah.
So yeah, it's a lot to tackle. Not only that, regulations always change, right? I mean, there's always new tax laws and new regulations that change on a day-to-day basis. Or unless you're in that world, day in, day out, there may be things that you miss out, you know, which can really help you on your taxes. So.
Anyway, okay. Why don't we, thank you very much. Why don't we say we'll be back here at 1:30? 1:30?
45.
1:30. Exactly.
Thank you so much. Great.